Hi there, you're watching the daily edition of Your Trades on ET Now. This is Priyanka along with me, Snehi. Another subdued session, what we saw on Nifty, Bank Nifty, and looks like large caps were again acting as a defensive today. If you look at the advanced decline ratio, it was clearly larger deep cuts rather coming in broader market only. Scenario looks very similar to what we saw yesterday. And the second clear trend, wherever there is an earning visibility, there is an interest of traders. And of course, on the back of the brokerage note, let's understand what were the key highlights for the day today. Of course, the kind of moves we've seen after the Tata Motors JLR, especially the updates coming in. We did saw a subdued quarter last quarter in terms of earning and not much of expectation being built up for this quarter also. And of course, the kind of updates which has come in from the large caps like Dabur or Hero MotoCorp, they have actually failed off to lift off the investor sentiment. That is very clearly visible on the Indian markets also. But major highlights to talk about today, of course, the chemical stocks were over the moon today, majorly because of the supply issues which aid the refrigerant gas prices, which stocks like SRF, Deepak Nitrite, to gains like even 10%, what we saw on that area, 13%, more than 13% what we saw coming on SRF, and not just SRF. In fact, entire chemical pack was buzzing. But in focus were many other stocks wherever there were brokerage notes. Swiggy did saw a brokerage note coming in from Bernstein, Zydus Life, Lupin and Bajaj Auto. Good surge coming in on these stocks, although majorly on the back of the brokerage notes. But what else did you capture, Snehi?
Well, a lot was happening in the markets today. A couple of counters were in focuses, like you mentioned, on the back of brokerage notes. Also, lots of action coming in the real estate space. Jeffries has a positive note, but that was your top sectoral loser in today's trading session. However, like Priyanka mentioned, SRF and along with that, Navin Fluorine was the other stock that was in focus today. Very good double-digit moves coming in on both of these stocks on the back of refrigerant gas prices becoming costlier in the US. So that's something that was faring well for these both of these stocks in today's trading session. A couple of other counters that were in focus. Swiggy on the back of the news flow that they will be demerging the Instamart app from the current Swiggy platform and expanding to 75 plus cities. Positive news flow coming in for Swiggy as well. That stock was up by about 3.5%. You had Manappuram Finance that was in focus today as RBI has lifted the curbs of its unit Asirvad Microfinance. That stock was higher by almost 6%, but then there was some profit booking seen on that counter, and that counter has closed in the red nominally. 0.5% cut coming in on Manappuram Finance as well. Lupin on the back of that EIR that they've received from US FDA. Good news coming in for Lupin as well. Bajaj Auto, a very positive note coming in, a brokerage note coming in. So we had some good flows coming in and good moves seen on that counter as well. So all of these stocks were in focus today. And another news flow that we've captured today is Carlyle Group is submitted bid for Avendus stake. So that is going to be something important to watch out for as well. Largely, this is what the market has shaped up to be like, but we have closed below the 23,550 mark, barely above the 23,500 mark. Let's understand where we are headed going into tomorrow's trading session, what kind of levels we can expect to watch out for tomorrow. And on that note, let me welcome on board Kunal Bothra, our in-house technical expert. Kunal, hi, thanks for joining us on the show. Give us a sense of what kind of levels we can expect to watch tomorrow in tomorrow's trading session, because 23,500, we're getting very close to the support level of 23,500 that analysts have been indicating. Tell us, what is the view going ahead? What's the market going to look like? Do you still believe that the broader markets will continue to underperform the benchmarks?
Good afternoon. So yeah, I think we are going through a grind on the indices. Over the last few days, we've seen a pattern of lower highs and lower lows for the index. Third consecutive day for the Nifty as well as for the Bank Nifty, and that too at a point where over the last over the last 14 sessions, we've closed below the 200-day moving average for the past 12 for 12 days out of the last 14 sessions. So that itself indicates that the markets are struggling to hold on to the long-term moving average. So that is a first important resistance zone. Whenever the index gets back into any kind of a recovery, it has to surpass about the longer term moving average with a lot of momentum as well as push in terms of volumes as well as in terms of the broad market breadth. Now the other part which we look out for is the underperformance which is coming back into a few sectors. For example, the banking index has been a key underperformer. But then there's some respite which has come back into FMCG names. There is some respite which has come back into individual sectors like specialty chemicals. Then you saw the paint stocks also recovering. So the markets are playing a bit of a mixed sectoral breadth, where you're seeing few sectors underperforming, few sectors outperforming. But net we're still going through a grind for the index, and that grind I believe should continue for some more time.
All right, so we did saw, of course, Kunal, FMCG, that wasn't positive today. But tell us one thing, Kunal, you know, the last time when we broke down the 200 DMA on Nifty, we did revisit the lower levels. I'm talking about way back in November month. Is this drag going to continue to those levels, somewhere around 23,300? Is it a possibility, or would that be too much of oversold zone that we could probably recover from there?
I think there should be a potential retest of that 23,200 mark, because what's happened is that many of the the stronger sectors, for example the banking index, etc. I think many of these sectors are showing signs of a multi-month low for itself. So that generally trickles into the benchmark indices sooner or later. And we also believe that 23,500 is an important pivot zone for the index. And I think over the last 4-5 days, we're just trying to protect the 23,500 mark. The moment we break below those levels, that's where I believe that the sell-off could probably intensify.
All right. So, Kunal, your top 2 recommendations for viewers at this point in time?
So I'll go with 2 buy calls. The first one is a buy in Kim's. That's a chart which is perched at a fresh multi-week, multi-month high. So would suggest a target closer to 688. Stop loss could be kept at 645. And the second would be a buy in ABFRL, a stock which showed a very good candlestick pattern today. So expecting the target of 286, stop loss at 270.
Kim's and ABFRL looking good amid a sideways market like this. Kunal, thanks so much for joining us and sharing your view and your stock-specific picks as well. But let's keep it going with words coming in from experts. And as we move closer to the Union Budget 2025, Rana Gupta, Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management, laid down his expectations this time around and what sectors he thinks will stand to benefit the most from this budget. Let's go across and listen in.
Let's take a step back and look at, if I break this in, NDA 1, 2, and 3, 14 to 19, 19, 24, and then 24 onwards. The first 5 years was about formalizing the economy, which boosted the tax rates and the tax to tax collection, tax to GDP. The next 5 years, 19 to 24, was about laying out the public infrastructure as well as giving corporate incentives to capture the China Plus One opportunity as well as increase domestic manufacturing. Now, so the government's balance sheet is improved, capital stock is improved. To complement that, you need employable and available labor. So I think going forward, you will see a lot of focus on that aspect, which only complements their previous policies. And one can look at these labor-oriented policies and how to play. I think this will be more in terms of skilling, education, healthcare, some of the housing-related spending, so on and so forth. I want to be clear, this is not populism. This is much required prioritizing of expenditure to development, to develop labor and make sure that they are available.
Okay, so Rana Gupta on his preferred themes, what we heard him. We stay for a short break here. When we come back, we get you the derivatives action and of course the stocks which were buzzing in trade today. Don't go anywhere.
Hi there, welcome back to Your Trades. Thanks so much for staying tuned to ET Now. Let's take a look at how the F&O space was shaping up in today's trading session. And this is the trends for the index futures for the January expiry. Trend for Nifty, we're seeing some short build-up over there. So looking slightly negative on that front. And for Nifty Bank as well, some short build-up was being seen. India Wix once again above the 14.5 level at 14.7. We've spiked up 1.3%. So nominal uptick on India Wix today as well. When you take a look at the Nifty active calls and puts levels, this is for the 16 Jan expiry. Active calls were being seen at 23,600 and 23,700. That's where call writing was being seen. So 23,700 is our next immediate resistance level. And on the put sides, then active puts being seen at 23,500 and 23,400. We're not seeing any support level as of now, but 23,700 on the upside is something that we need to watch out for. And that's going to be the next hurdle, the next key obstacle or the target, you could say, for the Nifty to cross.
Okay, so no support since there's a put buying. Of course, looks like the drag is going to continue maybe to lower levels where we went. We did revisit last time when we had broken and stayed below 200 DMA for 7-8 sessions. But moving on, let's get to the big story of the day, and that happens to be from the chemical space only. Chemical stocks SRF and Navin Fluorine were on the fire on the back of supply disruptions and higher prices. Analysts believe inventories have bottomed out and capacity addition could boost growth prospects in this space. Sharad joins in with more details on that. Sharad.
Stocks such as SRF and Navin Fluorine are buzzing in trade today. A curious note has stated that a large supplier or a US distributor has actually raised alarm when it comes to the refrigerant gas. especially the two categories. The first will be R32 and R125 variants. Now, they've stated that they're citing global supply constraints coming in the HVAC industry, which is the overall AC cooling solutions in the world. Now, the implication for this is that SRF has a capacity of 29 to 30,000 tons of R32 variant, which is expected to increase, as well as for Navin Fluorine that stands at 4,500 tons for R32. It's expected to double going ahead. Now, if you look at the math itself, every $1 per kg change in R32 realization increases SRF's EBITDA by roughly 260 crore rupees, and R125 the realization numbers stand at almost 60 crores. When it comes to Navin Fluorine, this number is at an EBITDA addition of 77 crore rupees. Also, we did an analyst channel check and they've stated that the refrigerant inventories, especially on the China part, that has started to bottom out. Chinese prices also the last 5 days are up 5 to 7% and also importantly this delivery days and the seasonal price hikes would be something to watch out for. The valuations, both of them at elevated levels, 43 to 45 times of both of these companies in the 12-month forward P ratio. But over the last 5 sessions, both the stocks have given more than 16% returns to the investors. And interestingly, UBS also came out with its reports on Navin Fluorine today. They have maintained buy target price of 4250 and upside potential of 22%, and they have been bullish, especially on the incremental revenue coming on the new plant and the company also doubling its R32 capacity.
Okay, thanks Charas for all of those details. So SRF and Navin Fluorine, your high flyers in today's trading session. But earlier in the day, we also caught up with Hemang Jani, an independent market expert, as well as Ajay Joshi, the industry expert when it comes to the entire chemical space. Let's go across and take a look at what they had to say about the momentum that we've been seeing in this space of late.
I think some of the companies have done well, something like Ami Organics, even SRF, Navin Fluorine are seeing a bit of a pullback in the market, partly because of this refrigerant pricing part, partly because of the better visibility on their global business. So I do think that when there are very few pockets where you can really put your hand and say that there's going to be a certain growth, I think this particular pocket still looks like a good hiding ground. So I think one can really look at, something like Ami Organic or, Navin Fluorine at this point of time, at least from a medium-term perspective.
Good news that is coming from China is that their refrigerant gas inventory last year, that has finally bottomed out, which is a very good sign for Indian companies like Navin Fluorine, Gujarat Fluoro and SRF, because last year these fluorochemical companies suffered a price decrease and they suffered in terms of margins. But now that China demand is bouncing back for refrigerant gases, the prices have already gone up 3 to 5%. So that's a good sign for Indian companies. But virus is not going to affect much the chemical supply chain, but the new year definitely will.
So some experts see some tailwinds for the sector, but let's see how do the sector shows up in terms of earnings going ahead. Moving on, let's get more of the stocks that were buzzing in trade today. Rabinder is standing by the whole list of stocks on that. Rabinder.
While Tata Motor is in focus, where company has announced its JLR Q3 FY25 update, and the company's wholesale was up by 3% year-on-year basis and 20% up by quarter-on-quarter basis. And the most profitable model share increased to 70% of JLR's total wholesale volume. But the consensus are unclear with the growth in JLR, and the analysts believe that the margin may remain below 8 to 9% as guided by the company. And also the Tata Motors Group global wholesales in Q3 FY25, including Jaguar Land Rover, was up by 1% year-on-year basis, and the global wholesale of Tata Motors passenger vehicle in Q3 FY25 was up by 1% year-on-year basis. Moving to next, Lupin is also in focus, where company has received the EIR with an inspection classification of voluntary action indicating from the US FDA for its Pithampur manufacturing unit, and the unit manufacture both APIs and finished goods. Moving to next, NMDC is also in focus, where NMDC has slashed iron ore prices by rupees 350 per ton. Apart from this, on back of brokerage note, Zydus Life Science is also in focus, where Nomura has upgraded the stock to buy with target price of rupees 1140, and Nomura says that the company's strong balance sheet presents scope for the growth through value accretive acquisition, and the stock has underperformed the Nifty and the risk reward looks favorable for the company. Moving to next, Manappuram Finance is also in focus, where RBI has lifted the restriction imposed on the Ashirwad Microfinance, which is a subsidiary of Manappuram Finance, with respect to sanction and or disposal of loans with immediate effect. And some brokerage note is also coming on Manappuram Finance, where BofA has maintained their buy rating on Manappuram Finance with target price of rupees 235. This says that the valuation of the company looks attractive, and they have increased the earning forecast by 1 to 4% by FY25 to 27.
Ravinder, thanks so much for joining us with all of those stocks that are buzzing in today's trade. But let's move on from then, and time now for an ET Now exclusive. The competition to acquire KKR's majority stake in Avendus Capital is turning intense. A US PE giant Carlyle Group has put a binding bid for a 63% holding, joining rivals Japan's Mizuho and Nomura in the fray. My colleague Anurag Joshi is joining us with all of those details. Anurag.
US private equity giant Carlyle Group has put a binding bid for a majority equity stake in Avendus Capital. Avendus Capital is a financial firm which has investment banking, it's a financier, and it's got wealth management under its fold. KKR and Company, which owns 63% equity stake in Avendus Capital, is looking to sell its stake in the company. And the other competition to Carlyle that have put binding bids for the transaction include Nomura and Mizuho. Avendus was founded in 1999, and KKR had bought a stake in the firm in 2015 through a capital infusion. It had taken a 63% equity stake through a unit called Red Point Investment. And in 2017, subsequently, there was another round of capital raising by Avendus Capital, in which KKR had participated, and the other investor that had stepped in was Gaja Capital, and a high net worth individual had also put in money at that time. KKR had invested money initially through its fund, Asian Fund 2. And Avendus is one of the biggest investment banking firms in India, and is associated as an advisor in many of the M&A and many of the financial transaction deals.
The space seems to be heating up. Thanks very much for this update, Anurag. Keep us posted on the latest development on this. With this, it's a wrap on this edition of Your Trade. Thanks so much for watching, but stay tuned to ET Now for more business updates.